Hey everyone, welcome back to LoopHub, where I simplify crypto for everyone. Today I'm diving into an important topic. How do interest rates impact the crypto market? Sounds boring? I promise. It's more powerful than you think. Let's start with the basics. Interest rate is the cost of borrowing money or the reward for saving it. Central banks like the Federal Reserve, US, or RBI, India, adjust these rates to control inflation and economic growth. When interest rates go up, loans become expensive, people borrow less. When interest rates drop, loans are cheap and people borrow more. In traditional finance, when interest rates rise, stock markets usually go down. Why? Because higher rates make borrowing costly and reduce business profits. Now, here's where it gets interesting. Crypto might feel like it's independent from the banking world, but it's not entirely. Here's how interest rates affect crypto. First, liquidity shrinks. When central banks raise interest rates, it sucks money out of the system. There's less money to invest in riskier assets like Bitcoin, Ethereum, or altcoins, so demand falls, and prices often drop. Second, investors prefer safe assets. Higher interest rates mean you can earn decent returns on government bonds or bank savings. So why take the risk in crypto? Big investors start shifting to safer options, reducing inflow to crypto. Third, impact on DeFi and borrowing. Decentralized finance, or DeFi, is built around lending and borrowing. When global interest rates rise, even DeFi platforms see reduced activity. Why borrow crypto at 10–15% if you can earn 5% from US bonds risk-free? Lastly, strong dollar equals weak crypto. Rate hikes in the US make the US dollar stronger. And since Bitcoin is mostly traded in USD, this leads to a relative fall in BTC prices. More people sell crypto to hold dollars, especially in emerging markets. But it's not all bad. Sometimes crypto can shine during high inflation, even if interest rates go up. Why? Because some people turn to Bitcoin as a hedge against fiat currencies losing value. In 2022, when the US Federal Reserve started raising interest rates aggressively, Bitcoin fell from $69K to under $20K. Liquidity dried up, risk appetite vanished, but by late 2023, when markets expected rates to drop, crypto started rising again. So the next time you hear, the Fed is hiking rates, remember, it's not just for banks and real estate, it directly affects your crypto portfolio too. To be a smart crypto investor, you must understand macro trends, and interest rates are a big one. If you found this helpful, drop a like, share this with your crypto buddies, and don't forget to subscribe to LoopHub for more simplified crypto insights. Until next time, stay curious, stay safe,